In this video, you'll learn everything you need to know about market maker models. Yesterday, I hosted a charting session / webinar about market maker models specifically. This is also to give you a sneak peek of what goes on inside of my community. This is something that we do every single Friday, and this Friday, it was about market maker models. I know a lot of people struggle with the market maker models, so hopefully this video can clear up some confusion. Now, this is quite a long video, but I do believe I cover every single thing that you need to know about the market maker models. I give examples, both chart examples and drawn out examples, so that hopefully everybody understands exactly what I'm talking about. So I hope that you will stick through this whole video. I know that it is long. You can try to speed up the video if that helps. So without further ado, let's start the video and I hope you enjoy. Yo, what is going on? We'll let people join up real quick. But yeah, the things that I want to go over today is the market maker buy and market maker sell models, and then obviously review some trades. And if you have any trades that you want reviewed, I would highly suggest that you send them over and I'll go over them. We'll go over them together. It's kind of the whole point of this. And the reason why I want to go over market maker models is because a lot of people don't seem to understand them and how powerful the market maker buy and market maker sell model actually is. It's definitely, like, if I had to choose one model that I could trade for the rest of my life, market maker models would definitely be one of them. Because it's not like an entry model within itself, but it's something you can apply to an entry model that you already like, right? So if you trade for VA gaps, you can apply that to the market maker models, and it goes for any PD array really. And the reason why it's such a good concept to know about is because it provides the best possible entries that you could get, okay? And it's really simple for when you should be entering inside of the market maker models. I'm quickly going to draw a textbook market maker model out here. And so I'm going to draw a market maker sell model. And essentially what we're looking for is a sell side curve, a buy side curve. Some sort of consolidation. Doesn't have to be a consolidation, but it is very nice if there is a consolidation at the top or the bottom. So for a market maker sell model, which this is, we would want the consolidation to happen at the bottom and not the top. It's fine if it happens at the top as well. But the reason for this is obviously because this buy side curve here is there to engineer liquidity for the sell side curve to take out, right? So if we have a consolidation down here, we likely have equal lows and a lot of stop losses. So if we have a consolidation at the beginning of the buy side curve of a market maker sell model, that's very nice, right? But essentially it moves in two stages, sometimes three, but primarily two, right? We like to say first stage distribution and second stage distribution. And distribution is, again, just a fancier word for consolidation. And so basically what that means is once you get the first displacement leg or expansion, you can expect a first stage distribution to happen, which is essentially just a consolidation forming. So it might look like this. Then you'll get the second expansion or displacement. Then you'll get the second stage distribution, which is, again, just another consolidation. Then you'll get the last, hopefully the last expansion leg down to sweep that original consolidation. And that right there is the market maker sell model. We're going to look at some examples, but that right there is the first stage distribution. This right here is the second stage distribution. Now, sometimes you'll get a consolidation here that you can call voice issue. Is there a voice issue? Is it good? I have none? Okay, good. Okay. Yeah, okay, again, what I was saying is you'll get a third stage distribution sometimes. Does that mean the market maker model is invalid? No, it absolutely does not, okay? And one of the reasons, one of the confluences I use to spot the smart money reversal of the market maker models, and if anyone's confused, the consolidation at the top is what we call the smart money reversal, because it's the reversal point that takes it from a buy side curve and then creates that sell side curve, right? The whole purpose of the buy side curve is to engineer sell side liquidity for the sell side curve to come and take out. And so with a market maker sell model, we obviously want to look for shorts during the sell side curve, right? That's the whole point of market maker sell models. But how do you know whether it's the beginning of a market maker model, or it's just another consolidation expansion? Well, you don't always know, and that's why it's very, very dangerous to be trying to execute trades in the smart money reversal and even inside the second or the first stage. I always recommend people to look for trades inside of the second stage distribution and not the first stage, simply because once you get to the second stage distribution of a market maker model, you are way more confident that it is indeed a market maker model than when price is in the first stage. But the most important part about all of this, is that you enter inside of consolidations, okay? That's when you want to be entering. And so what I look for is basically violations of PD arrays, like I always do. But because during the buy side curve of a market maker sell model, ideally the bullish PD arrays should hold pretty well. Obviously some can fail, but they should generally hold. And so once we start violating those bullish PD arrays, that will tell me that we are now ready to start the sell side curve of the market maker sell model, which is this curve here, right? So what I usually do to find high probability market structure shifts is if I get a candle closure below a down close swing low that also closes below an imbalance, okay? So typically I won't validate a market structure shift before we've had a candle closure either below or above a fair value gap, right? And so if we get a candle closure below a swing low, but we still haven't closed below an imbalance, I'm not interested or not convinced enough that it is a market maker sell model yet, right? So for example, if we had a swing low right here, let me delete these rectangles. And so if we, for example, had a swing low here, and we had a candle closure below that swing low, but we also had an imbalance resting right here, I would not trust this market structure shift until a candle has closed below this imbalance. And if I get a consolidation after we close below that imbalance and then an expansion, so this is the consolidation. As soon as I get this expansion, I know that we're inside a market maker sell model, and I will have to look for my entry inside the next consolidation that appears, right? That's the second stage distribution, which is right here. So that is when I want to find my entries, right? And so how could you enter here? And that all depends on your model, essentially, right? Or whatever you want to trade. I like to sell the highs and buy the lows. You guys know this. So what I will look for is typically, because we had an expansion here, you will have 1 minute fair value gaps or 2 minute fair value gaps, depending on the time frame. This, by the way, applies to all time frames, and you'll see with the examples in a minute. But you'll typically have one or two gaps here, right? And so what I'm looking for is a high to get created inside of one of the imbalances, preferably the bottom one, and then a sweep of that high. And something I've picked up along the way with these market maker models is that when you have, let's say you found a market maker model on a 3, 4, 5 minute time frame, and on a 1 minute time frame, you have two imbalances in the second expansion leg. So right here, what I often found, I would say 90% of the time when there's two imbalances, the top one is going to hold and the bottom one might get violated. So we might see a candle closure above the bottom one on a lower time frame, but the top one is generally going to hold, right? And so if we form a high here, but we haven't hit this imbalance yet, and we then come up and sweep that high and hit the second gap, that's the sweep of that high is my entry, either that or the imbalance right here. Those are typically my favorite entries for market maker models. That is both the buy and sell model. What if we have two big fair value gaps after distribution? How to play stop loss correctly? So are you talking about the expansion leg? So for example, if we have, let's say we have a imbalance like this. That's what you're talking about, right? Yeah. Okay. So what I do here, if we have such a big imbalance, what I will typically do is either I wait for a 1 minute high to get created inside of that imbalance, right? So for example, if we come up into the imbalance, we create a 1 minute high, we get a couple candle closures below again. And then if we come up and sweep that high one more time, that's when I'll enter. And that will typically be a good part into the imbalance, right? And basically what I want to do with the market maker models, in my opinion, is be able to place my stop at the top of the first stage distribution, and then to take profit at the low of the market maker sell model, or the original consolidation, right? I really enjoy having my stop loss set up above the first stage distribution consolidation, because in a market maker scenario, we ideally shouldn't come up here again into the second stage. It just shouldn't happen. And so if we do that, it's likely not a market maker sell model, and therefore I like to place my stop there, right? Because then if we do end up coming up there, my idea is invalidated and I'm out. So a good rule of thumb is to have your stop loss, if you're entering in second stage distribution, above the first stage distribution consolidation. That's what I would say. And if the gap is really large, just make sure that your stop loss is set above the contest encroachment, because measuring gaps is often stuff we see in market maker models, right? And now what is a measuring gap? Well, a measuring gap is when we have an imbalance, it doesn't have to be large, but an imbalance, right? And we respect the contest encroachment of that imbalance, meaning that we do not fill the entire imbalance. That's the idea behind a measuring gap. And that's something that you will often see with market maker models. So if you have a really large imbalance and you want to get an entry inside that, but you're just not comfortable with your stop, you don't know where to place it, maybe the high of the first stage distribution is just too large of a stop loss, then I would definitely say just make sure that your stop loss is placed above the contest encroachment of that large imbalance, because it's likely going to be a mitigation, not a mitigation, sorry, a measuring gap, yeah. And so that's what I do. That's a general rule of thumb I have. Let's say I short inside of a really large bullish imbalance, and it doesn't even have to be a market maker model. I will not enter anything if I cannot put my stop above the contest encroachment comfortably, you know. And that's just a rule of thumb that I have. So gaps that are so big, so if the gap is so big where I become uncomfortable placing my stop above the contest encroachment, I'll simply just have to stay out, you know. And so that's kind of how I go about placing my stop losses in general. And then again, placing the stops inside of market maker models is you enter in the first stage, put your stop at the high. You enter in the second stage, put your stop at the high of the first stage. That's the yeah, that's kind of the stop loss placement that I like to use when talking about market maker models. And something that not a lot of people talk about, I guess, in terms of stop loss placement, is if you get an SMT, right? That should generally hold. If so, say we are bearish, we are in a market maker sell model, and we get a bearish SMT. That SMT should generally hold. And so what I like to do is place my stop at the high of the SMT. That allows me often to have a very tight stop. But if the SMT is valid, that stop loss is going to hold. And so that's how you can often get very large risk to reward trades, if you're that kind of trader, is by placing your stop at a high that has an SMT, or a low that has an SMT. Does market maker X models work with crypto? Saying good. Yeah. I mean, I've seen people use it plenty of times on crypto. I think it was it XRP that I saw a pretty clean, yeah. So right here on XRP we had a pretty good one, right? Let me show you. Can I go in replay mode? I cannot. Okay, whatever. So we see right here we start to displace to the upside, right? And again, this is a crypto. Once we start to see this displacement, am I comfortable entering a position yet? No, I'm not, right? But what makes me think that we are probably going to hit this high eventually? How can I spot that fast? Again, like I said before, obviously this is a market maker buy model example. So what I just told you, you have to flip it around. But essentially, during the sell side of the market maker buy model, which is this curve right here, I'm going to mark it out so it makes more sense. So right there, during this curve, notice the PD arrays that we formed, like the fair value gaps, right? So all I'm going to do now is mark out all the fair value gaps, right? all I'm doing here is marking out all the Forex gaps, okay? I don't know what's going on here. So I'm marking out, again, the Forex gaps of the sell side curve. And by the look how we are respecting these Forex gaps, right? So we have done nothing but respect bearish PD arrays on XRP right here on the daily chart. And so what happens right here? We violate this imbalance, right? Am I comfortable saying, okay, I'm expecting a reversal because we got a market structure shift right here? No, I'm not comfortable saying that, right? Because I need the closure above this imbalance in order to validate that market structure shift, which I got right here. So once this candle closed, I was now comfortable looking for my entry. Am I going to enter straight off of the candle closure here if I'm expecting a market maker buy model? No, I'm not, right? Because we've just gotten a pretty decent displacement leg right here. And so what can I expect after that? I can expect a first stage distribution, which is the first consolidation that we just talked about, which is exactly what happened right here, right? We got that first stage distribution. Again, look at this example right here. Some people will classify this as a market structure shift, again, because it's a swing high and it's an up close swing high that gets closed above. But why do I not trust that? Well, I simply don't trust it because we haven't closed above this imbalance, right? Say this candle closed above this imbalance, then I would trust that market structure shift, right? And so that's how I identify whether we are going to be starting the buy side curve of a market maker buy model or not, is if we very successfully held all the bearish PD arrays here and then suddenly start to violate them here, that's when I am going to anticipate a market maker buy model. And so where will my entry be? Well, my entry would have to be somewhere in here, right? That's the first entry that you could get, because down here it's basically impossible to get an entry. So somewhere in here, I would look to get my first entry, right? And if there was nothing there, I would have to wait till the next consolidation, which happened right here. There you have the second stage, right? This is not as clean as when you draw it, obviously, but you get the point. We have the first consolidation, we have the second consolidation. So all we have to do here is look for an entry here or here. It's actually not that hard, right? Obviously, this wick down quite a bit, but it still ended up, forming quite a nice consolidation. So an entry somewhere in here would be nice. And again, what did I say? Place your stop. If you enter here, it's going to give off a pretty bad risk to reward in this example. But ideally, enter here, stop goes here. Enter here, stop goes here, right? And so, yeah, that was a successful market maker buy model on XRP. And I actually know someone who personally took this. And that's why I kind of knew that it was there. Let's see. Can it be good on market maker sell model on Bitcoin? Let me go over it. So no, I do think that it looks way more like a market maker buy model right now on Bitcoin from a daily chart point of view, right? Because again, why do I think that? I'm gonna mark it out right here. So we have a higher time frame delivery, which is something that can often begin that smart money reversal, which is exactly what we saw here. Again, if you know anything about me and my turtle soup strategies, you know this, right? We have a low that failed to fill the imbalance and actually failed to hit the economy encroachment. So we sweat that low, but we still closed inside the imbalance. So that's the turtle soup entry right there in itself. What happens right after that turtle soup? Well, we violate this imbalance, right? Soon as this imbalance gets violated, I'm now interested in looking for longs because I could see this as a possible market maker buy model, right? Especially with the equal highs that we have right here on Bitcoin. And you see that I have posted up a long here. A bit of an optimistic long. I'm not sure if I'm going to be able to get an entry off of the 64 level, but definitely something I would be interested in for a swing sort of trade, right? And again, we see it here. We have the first stage distribution here, right? What are we doing right now on Bitcoin as we speak? We are inside the second stage distribution, right? Before eventually hitting these equal highs. And I guarantee it almost, you can come back to this video and obviously a few days later and then see if whether the market maker buy model finished or not. But yeah, pretty clean market maker buy model on the daily chart on Bitcoin again. Yeah. My TP is higher than your inter. Oh, really? Oh yeah. Oh, okay. Sorry, I didn't see that you had it was such a small time frame. Yeah, absolutely. What you're looking at there could be a market maker sell model, but obviously not the cleanest one, right? The first stage distribution of that example right there is obviously very large. Let me show you a few examples that I've taken pictures of here. So for example, this right here, excuse me. This right here is a absolutely beautiful example of a market maker model, right? And obviously, when I say that if you enter in second stage, you have to put your stop here, take it with a grain of salt. You do not have to. That's the safest option. You do not have to, okay? So you enter somewhere in here. You can place your stop somewhere down here that you are comfortable with, because ideally we shouldn't go that low if it's a proper market maker buy model. But in this example right here, it's actually a very, very good example. We have a market maker buy model that began because of an AMD. So again, what's an AMD? We have a beautiful consolidation happening here, and I actually took this trade personally. But again, we have a beautiful consolidation happening here, and this entire leg down, I'm anticipating as manipulation, right? Right down into this hourly or hour 4 imbalance, right? And at this moment, I'm anticipating the smart money reversal to be somewhere around here, because it's the manipulation phase of an AMD, right? Because we have the first stage here, then we have the second stage, which is the manipulation. Now we expect the distribution, right? And so my entry was actually somewhere down here. I got the most perfect entry on this trade right here, and I took it live. I don't know if any of you were in there, but very, very good trade. And then obviously we have the first stage distribution happening here, where a lot of people will again get scared because maybe they got an entry somewhere down here. They see the market consolidate and they exit the trade. You were there, okay, nice, Batley. But if they knew about market maker models, they would know that this consolidation is kind of like it has to happen almost, right? And so second entry, if you didn't get it down here, which obviously not a lot of people did, it's very hard and very, very risky. So second entry could be somewhere around here. You could go off of the unicorn play here, or the breaker play, sorry, mitigation block, whatever you want to call it. Something here, right? A change in state of delivery, just something. And if you didn't get it here, you can go in for it in the second stage. And obviously the second stage is, in my opinion, the safest option to go with, and typically where I will enter most of my positions when I'm looking for a trade inside a market maker model. It will be inside the second stage again, because at that point I'm just so confident that it is a market maker model. And so I become way more confident in executing my trades, right? And something I've experimented with, not something I would say I recommend, but definitely something that you could do, is just blindly entering in these consolidations. That can absolutely work. You do not necessarily need a PD array. For example, right here, there's really no PD array in this consolidation. But if you know that it's a market maker model, you know that a large expansion is likely going to happen here in just a moment. So sometimes I'll blindly long in second stage distributions inside the consolidation. That can absolutely work. You're not going to get as precise of an entry, but if you are very confident about the buy side curve of a market maker buy model, or the sell side curve of a market maker sell model, you can actually just enter inside of the consolidations, in my opinion. Now I do have, let me see, I have 2 more examples. Yeah, right here is another great one. So this right here is a picture perfect example of a market maker model, right? Obviously we have a swing low down here. We had an expansion higher. We had displacement to the downside, violating an imbalance right here. Notice how this entire leg, we were holding bullish PD arrays. There's an imbalance here that we were holding, and there's an imbalance right here that we were holding. Right up here, we closed below this down close swing low, and we closed below this imbalance, right? So at that point, I'm already interested now to look for a short, right? Then the consolidation happens, which I just told you will likely happen after the market structure shift and the gap violation. So as soon as this first stage distribution happens, I'm already looking for a trade, right? Ideally, the bearish PD array should hold, so you can enter off of just this imbalance right here, which you can see this high hit, and then it went lower. But the second stage distribution is where it gets really interesting, right? Because remember what I just told you about a lower time frame, you will typically get 1, 2, or 3 imbalances inside of the expansion leg. Notice how we have 2 here, right? We have 1 here, and we have a larger one here. Now, I said that the first one is likely going to get violated, and the second one is likely going to hold. Now, what happened, right? The second one held, right? The first one got violated, the second one held. And that's typically what you will see in the second stage distribution, right? So I'm interested in shorts in the second gap if there is multiple. If it was just one large imbalance, I'm interested in a trade off of perhaps the concentrated encroachment and then stop at the top of the gap, or an entry at the beginning of the gap, but my stop had to go above the concentrated encroachment. Again, so another great example right there, probably one of the best examples you'll see of a market maker model. This was from quite a while ago, but it was just so good I took a picture of it. And we have one more example here. Wow, which is very, very hard to see. Let me see if I can zoom in here. But again, we do see it here, and right here, very, very bad quality picture, but you don't really need the quality here to understand. So again, we see it here. First stage distribution happens here, right? Second stage distribution happens here. And then this one, we actually get a third stage, which I was talking about prior. And that's right here, right? So we get first consolidation right here. That's your first entry. Then we get the second stage distribution here. That's your second entry. Then we get the third stage distribution here. And that right there is your third entry. And now look at this again. This is in the second stage, right? But this is just a market maker buy model. But notice here, I don't know if you can see it or not, but we have an imbalance right here, a larger one that gets violated. Then we have the second one, which we hold very, very nicely, right? And so that's just another great example of my analogy, right? I just told you that in the second stage distribution, we'll likely get multiple gaps here. Expect the second one to hold and expect the first one to fail. That's what I always do, and that's what I recommend that you do. And you see it right there again, right? So that's the market maker models for you right there. I do not think that you need anything else in terms of the market maker models. You'll see people having a whole course dedicated to this concept. I do not think you need any of that, okay? People make it way more complicated than it is, right? You can just look for these V shapes. Obviously, what I told you is obviously better, but like these market maker models are essentially just these V shapes, right? And if the V shape starts with a higher time frame delivery, like a higher time frame PD array, expect it to be a market maker model, and that right there is basically enough for you to make money. So the other things I told you is obviously just me going into detail a little bit more. Let's see, Euro. Oh yeah, look at that. Let me try to look at EURUSD right here. Let me clear up my lipstick on my chart. Just a moment here. So here we are. We see another example, right? I called this out in the Discord earlier today. I said that these equal highs is where I wanted EU to go to. It has been for a few days, but obviously we have failed. I was really expecting today to be the day where we hit these equal highs. And here we see another market maker model. Obviously, this is a bit of an odd one. A little bit harder to get an entry here. I actually alerted this one play in the Discord, which was right here. Right, so the play looked like this. Obviously, we were unlucky enough to get stopped out break even, but again, very, very good play. Analogy or idea was completely right? And looking at it right now from a 5-minute point of view, it does kind of look like a market maker model, a market maker buy model, right? Just not a really clean one, because the consolidation happened really, really late. And at that point, it can become very scary to long, because we have so much bullish displacement, and we have so many inefficiencies down here. We have equal lows down here. What do I do? Right. And so that's when it becomes difficult, when you can't get an entry until the very, very end. And yeah, again, that does become difficult. But you see it right here. You see the first consolidation here, second consolidation here. Then we have these order blocks forming every now and then, but I don't know if I would classify that as a consolidation. So I'd probably say first stage, second stage, and now the highs is probably what I would say. But again, these market maker models are not always going to make the most sense. They're not going to look the cleanest. But the more that you do look at it and the more that you do trade it, the more you pick up, and you'll be able to identify them without them having to look picture perfect, right? So yeah, that's the market maker buy model for you right there. Actually, I'm gonna go over an example that I took. I took a trade this morning, London session on NQ, which I'm quickly going to break down. Let me see. We haven't actually hit these highs yet. That's pretty neat. See right here again, we're actually just looking at it on NQ, right? Could we expect an expansion higher in a minute? We probably could, right? Because it does look like a consolidation before an expansion. Again, not the cleanest market maker buy model at all, right? The expansion leg was maybe a little bit too large. But again, it does kind of look like the first stage distribution happened right here, and that the second stage distribution is what is going on right now before hitting the highs, right? Maybe even all-time highs again, who knows? But that's not the point. I want to show you the market maker model that I actually ended up taking this morning on NQ. And this right here is essentially what it looked like. I was on a 2-minute time frame. And so notice here how this is not a clean market maker model whatsoever, right? But essentially what I'm seeing here is we don't really have any higher time frame delivery. We have this 15-minute inversion in for a gap right here, which obviously sent price higher. But essentially what I'm looking for is just seeing the market just going higher, having all this engineered low resistance liquidity, high resistance liquidity, whatever you want to call it, right here, right? Bunch of stop losses here, bunch of stop losses here, bunch of stop losses here, equal highs right here. And actually, this was another thing that I called out as a key level this morning, was these equal highs, right? And they did end up get hit a few hours after I put out the key level. And so my entry was at 06. So that was right here. And again, this is one of those examples of me just entering. Let me see. It was a 1 to 3. So stop was somewhere around there, right? A little bit below that low. But yeah, this was just another example of me just entering off of almost no PD rate. The only thing that I was looking at was this inversion imbalance right here, which we had obviously closed above and was now sort of just hanging around in. And I was expecting an expansion to happen very soon because it did look like a market maker model, just not the cleanest one, right? And so obviously that is exactly what happened. We get a small consolidation before eventually hitting the highs. And that right there was my trade for Friday. I didn't need anything other than that. And obviously the market, like we talked about in the live stream, just didn't present anything that I wanted to take, right? And so you will probably see me use market maker models 80% of the time when I enter a trade, just because they are so reliable. And that's why I'm kind of going in depth here, because I really want you guys to understand how these market maker models work. And they're not actually that difficult to understand, right? You're just looking for V shapes. Again, it's just that's probably the easiest way I could describe a market maker model is V shape, right? Because it does look like a V shape here. And so that's probably the simplest explanation to a market maker model. Then obviously once you apply the stuff that I taught you in this charting session, you will obviously start to understand them way more. But yeah, that's basically all I had for market maker models for today. So if you have any questions, please ask them right now. 1 second here. Excuse me. Yeah, sorry. Yeah, any questions? Go ahead and ask. No questions? Okay, good. Yeah, you got your questions with the... Did you record this session? Yeah, I did. I did record it. Don't worry about that. Do not worry. And it will be posted so everybody can go watch it. Because obviously not a lot of people showed up. But that was to be expected. I gave out a very, very late notice about the sudden time change, which obviously is very inconvenient. But again, it does not really matter that much because it is recorded. The only thing that matters is obviously they can't ask questions to the stuff that I'm teaching, but they can just go over the charting session again, which is why it doesn't really matter. But yeah, that was basically it for market maker models. This week have been extremely tough. I think the past many weeks have been really tough for me. And the reason for that is simply just because of the large sell-offs. I'm gonna get to your question in just a second, Ore. It's because of the large sell-offs and the large just pushes higher, right? It just becomes very difficult to find an entry, at least for me, because we just move with so much displacement, and yeah, it's just almost impossible to find an entry, and so it's been really tough. I've barely even traded this week. How do you choose the entry for the market maker model? Again, like, all you have to do, man, is look for whatever PD array you want to use inside one of the consolidations. It's actually really simple. So if you like Forex gaps, well then use the analogy that I gave you about the second stage entry of the second imbalance, right? Because again, like in market maker buy models, for example, the second stage distribution, go to 1 minute chart, see if there's 2 imbalances there. And if there is 2 imbalances in the expansion leg, trade the second one, right? That's one entry for you there. That's something I typically do a lot, right? If there's a high prior to that and you turtle soup that high, like I went over, then those are the best entries in my opinion. I did the 2 examples I gave. Both of the examples, obviously the second Forex gap held, so the proof is in the pudding. And I wouldn't tell it to you. I wouldn't teach it if I hadn't, looked at it 1,000 times and over. Hi, Azo. What's going on, brother? What's going on? Yeah, we just finished up on market maker models, man. So again, sorry for the late notice, but it was recorded, so you will be able to just watch it all once I get it uploaded. So yeah, very late notice there. I apologize for that. But yeah, again, like, it's not how you enter market maker models just solely depends on the PD array that you want to use. Just make sure it's inside one of the consolidations and you should be good, right? Obviously, it's hard to enter in the middle of displacement leg, but like, just look for it inside the consolidations, look for your model, and that's personally how I do it. And if there's 2 imbalances, trust the second one, not the first one, is what I would say. So yeah, that was a decent little 40-minute rant of market maker models there. If you guys have, before I leave, any examples, if there's anything that you want me to review, maybe you have a trade or something, I'll go over it. If you don't have that, then we're just gonna call it here. And yeah, that was basically like basically like a technical market maker model webinar almost. And essentially gave you all that I personally use market maker models for, and the information that I've gathered throughout the years of using market maker models. Again, there's not actually a whole lot to say about the markets recently. I do not think trading all-time highs, displacement up, displacement down, hard to find entries. How to figure out the beginning of market maker models? I mean, the low risk entry. So again, like, I'm gonna upload this video and you can watch it. But again, what I'm gonna use the XRP example just for you, Excel, real quick before I jump off, because we had a beautiful one on the daily chart on XRP of some time ago, and right here, right. So how do you know the beginning of a market maker model? Quickly gonna go over it again, right? Well, if we take a look at the sell side curve of this obvious market maker buy model, and we mark out the PD arrays, right? What do we see? PD array holding here. We have one here as well. Small imbalance here that we hold, right? We have one here too that we are obviously holding here up here, right? So we're holding the bearish PD arrays all the way down. But what happens down here? We trade through an imbalance, right? Have we done that previously? No, we haven't, right? We haven't. And so once that happens, and especially with the displacement that it happened with, that's when I'm anticipating the buy side of the curve to start playing out, right? Am I going to enter here? No, I'm not, right? Why? Because I'm anticipating a first stage distribution to happen. So where do I enter? We actually see it right here again. I'm not saying this for fun, guys. Like, we have first imbalance here of the first stage distribution. Did that hold? No, it didn't. The second gap Did that hold? Yes, it did, right? And that will happen in the first stage and the second stage. So like I'm actually serious when I say this. Like, we have two imbalances. The second one's gonna hold. The first one is not. It just happens over and over and over and over again. And so, yeah, how do I anticipate a reversal? Liquidity sweep, failure to displace below, right? We swept the low here. Did we displace below that low? No, we didn't. Did we displace above the high? Yes, we did. Did we violate an imbalance while displacing above that high? Yes, we did. And that right there is the beginning of the market maker model. Which time frame it works? Well, I think all time frames. Like, you've seen the example I just gave you before was 1 minute, was from anywhere between the 1 minute and the 5 minute. The example I'm giving you here is on the daily chart. So again, any time frame, really. Sometimes I got stopped in SMT. Do you mean when an SMT happens, you get stopped? Or do you enter off of an SMT and then get stopped? But that's also an example I gave. Like, if there's an SMT inside the leg, then place your stop at the high or low, which has an SMT. Because if we violate that SMT, then we're probably not bearish or bullish, right? But yeah, or like all time frames, man. I use market maker models for my entries on the lower time frames. I use market maker models for my daily or my drawn liquidity on the larger time frames. So any time frame this plays out on, you know. It really does. And when do you want to avoid trading completely? Right? What are the times? How can you be able to pick apart bad trading weeks from good trading weeks? Well, example right here on XRP, right? Let's say you're trading XRP on a daily. That's your GM. That's what you trade, right? When should you be avoiding intraday trading? Well, if you are expecting this to be a market maker model, you should probably be avoiding intraday trading during these consolidations, right? Or the second and first stage distribution. So whenever you are anticipating a second or first stage distribution on the higher time frame, is exactly when you should avoid trading on the lower time frame, right? We actually just saw it with the DXY, and that's the reason why it became so difficult to trade. Because on the weekly time frame, obviously this market maker model failed. As you can see, we didn't actually hit the highs, which sucks, but it happens. So right about here, I'm starting to anticipate a first stage distribution, right? What does that mean? That means consolidation on the DXY, right? So should I be trading on intraday during this? No, I probably shouldn't, right? Because the DXY goes up and it goes down and it goes up and it goes down and it goes up and it goes down. And so it becomes very hard to trade with proper precision during second stage or first stage distribution on the larger time frames, right? So that's kind of my advice. Avoid trading intraday when the daily chart, for example, is consolidating in a first stage or second stage distribution. And that's kind of how I avoid days. Like, if the NASDAQ is in a market maker buy or market maker sell model, right? Say we're in a market maker sell model off on NQ. I'm going to draw it out real quick just for it to make sense. Right, hold on. Sorry. Okay, so let's say that we are in a market maker sell model. We just displaced below a low. We just violated an imbalance, right? What can I expect to happen right here? I can expect a second stage or a first stage distribution, right? So as soon as we violate that imbalance on the daily chart on NQ and we displace below the low, am I anticipating just a rally down lower? No, right? Because I do think that this right here from experience is going to be a market maker sell model. So what do? I wait for that consolidation on the daily chart if I'm trading intraday to end, right? I'm waiting for the displacement leg on the higher time frame to happen, right? Because in a first stage distribution, like right here, I am anticipating someday there will be an expansion leg to the downside because this is likely the beginning of a market maker sell model, right? And so intraday, I'm avoiding trading completely intraday inside of this consolidation. And only when I see us starting to displace away from the first stage distribution will I start trading intraday again, right? Because then I have a clear goal in mind, you know, because then I know that we're inside the displacement leg. of the market maker sell model, right? We just had the first stage distribution. The expansion is now happening on the larger time frame. So what do I do intraday? I just trade with that expansion, right? So in this example, I would just look for shorts all day long, right? During the expansion that we are likely going to have right here, right? So avoid trading here. As soon as you see us break out of that consolidation and start to display on the daily chart, now you can start trading intraday and look for your entries on a lower time frame, right? Because then your drawn liquidity starts to become clear. But the reason why I'm telling you to avoid trading intraday in consolidations like that is because while it may not seem like a lot here, it is a lot of candlesticks on a 1 minute chart, for example, right? So avoid trading intraday in consolidations on the large time frames. Trade it when the expansion happens. That's what I'm going to say. Sometimes the reverses have the first imbalance and I got stopped. Well, you know, they're not going to work 100% of the time. Nothing does, you know. But it just has a higher probability of working than not working, and that's all you need, right? Sometimes you'll have something that looks so clean, like we have just seen it on the DXY. I'm going to give the example again, right? We've just seen it on DXY. Could it still work? Maybe, but I don't like it coming down that low. First stage distribution, anticipated second stage, but second stage went way too low, you know? And so, yeah, it will fail, man. It will fail every now and then, but just know that it has a higher probability of working than failing. And then that's all you need in trading, you know? So please just look for this. When you're back testing, whatever you're doing, look for these, try to paper trade it, try to implement it to the model you're already trading, and then see how much the win rate of whatever model you're trading actually increases, right? The best turtle soups I ever get is in second stage or first stage distribution of a market maker buy or sell model, okay? And so that's how I applied my own model to the market maker models, right? And made them way higher probability. We just haven't been getting a lot of good market maker models recently, unfortunately. But, you know, that's just seasonality. They will come around again once we hopefully get the hell away from all-time highs at one point. But yeah, man, they're not going to work 100% of the time. Nothing is. But just like any other concept that works and has a higher probability of working than it does of failing. So, yeah, that was it for today. Sorry for the people who just joined very late. Obviously, I gave out a very late notice, but the whole thing was recorded, so I'm gonna get it uploaded. Yeah, I hope I helped some of you out with this short sort of webinar around market maker models. Obviously, it was meant to be a charting session, but I just realized that there's really not a lot to say about the markets. We're trading all-time highs, so we're just going up and down, really. So hopefully I cleared up a little bit of confusion around the market maker models. If I didn't, ask any questions that you want on Tuesday, because I'm not live Monday. It's a bank holiday. So obviously you're always welcome to just ask as many questions as you want inside of the live sessions. But with these charting sessions and webinars, I'm able to go a little bit more into detail, because obviously I'm not just going to rant for a whole hour on the live stream because I'm watching the market live. But yeah, you can go ahead and watch this video back if there's anything you were confused about. Thank you very much. Very beneficial. Well, thank you very much for coming, or I appreciate it a lot, brother. Thank you, Spasley, man, for coming. See you, brother. See you soon. Keep in mind, I'm not live Monday. It's a US bank holiday, so there's no reason for us to be trading on Monday. Thank you. I was a little bit late. Yeah, no problem, man. No problem. Thank you, Rockhound, brother. And again, this is recorded. I'm gonna upload it, so you guys will be able to go over it again. Take notes. Do whatever you gotta do. Have a great weekend, Spasley. Thank you so much for showing up every single day. I do appreciate it, brother. I wish you a very, very good weekend as well. I wish you all a good weekend. And have a good weekend, guys. Back to this weekend. Okay, come on now. Then look for it, man. Try and look for it. I'm going to upload this video as soon as possible. And then try to implement it in your paper trading first. You know, do back test of it. Get comfortable with it. And then eventually see if you can implement it into your own live trading. Anyway, that was it for me today. I'm going to go ahead and jump on a meeting, and then I'll see you all Tuesday. I'm going to do a weekly schedule again because I am not live Monday. So I will be doing a weekly schedule before the weekend ends for all the people that are not here. So yeah, we'll be live Tuesday through Friday. Again, not Monday. So thank you guys for coming today. Sorry for the late notice, and I wish you all a very, very good weekend.